Mark Matthews, Head of Research with Asia. He represents Bank of Julius Baer. He joins us live from Singapore. Mark, good morning and great to have you back on ET Now. Mark, are you happy, surprised that emerging market currency meltdown, which appeared like a perfect storm on Monday, has got arrested?
I'm happy and I'm a little bit surprised because the Turkish central bank was the catalyst for this reprieve, because they hiked their overnight rate to 425 basis points yesterday, which of course is a staggering move. And so that has caused their own currency to rebound sharply. And then in Argentina, which of course started this whole thing on Wednesday last week, the peso seems to be hanging around 8, which is the new target. And the central bank there has had to spend less than half what analysts had expected them to spend, as Argentines have been able to buy dollars for the first time in 2 years. So I am happy and I am surprised. I thought that the markets would get clobbered a little more on the back of this.
Mark, what's the sense about India then? Because the RBI back home as well increased rates in a rather surprise move.
Yeah, so all of these central banks in the emerging markets are being very proactive, and that is a very good thing. They want to be on top of this situation and not let their currencies succumb to panic. And the way they do that is by raising rates. So I just read that 42 out of 45 economists polled had not expected the rate hike in India yesterday. It certainly was a surprise. I think that a few economists had even been thinking the central bank could cut rates, and the impact will be negative on the economy. As I said, nobody really was expecting this, or at least only 3 out of 45 economists. But I still feel that India looks good going into this year, particularly with the election. But it seems to me the economy's past its bottom, so I feel pretty optimistic on India.
Mark, historically, we've seen that all emerging markets, they move in a group. So what happens to China, will have impact on Brazil. What happens in Brazil will have impact on India. But do you think now within the emerging market basket, we could see a big differentiation because problems in Argentina are entirely different from challenges in India?
Well, when you have a sort of panic or a crisis like this one that I think we're still in it actually, we'll just have to see what happens, but like this one that we've had since Wednesday of last week, then they do all move in tandem. But if it's, kind of a stable environment, then clearly you have very large differentials in movements. So, case in point would be the wonderful performance of these Southeast Asian markets like Thailand and the Philippines and Indonesia since 2009, whereas China was basically in the doldrums. So, when the dust settles, and I hope and I think it will, then I think India is set up well for a decent year.
Mark, how serious is China? Because there is mixed opinion on what one should expect from China.
Well, I actually think that the beauty of China is it's slowing down, because in the process of slowing down, these big bloated state-owned enterprises which are corrupt and therefore inefficient, and they get loans far before interest rates. They should be getting loans, and therefore they can outbid the private sector in all kinds of projects. These state-owned enterprises will be forced to become efficient. A combination of the economy slowing down, less access to capital, and exposing and cleaning up the corruption in them. And that process has started. So it'll be bumpy, and that's why people are naturally worried about this purge, this corruption purge. I think that there was a trust product which probably would have defaulted, that the largest bank in the country, ICBC, helped distribute, were it not for Chinese New Year. They didn't want to create a panic during the holiday period. But I think there are undoubtedly other wealth management / trust products which will default during the course of the next 12 months, or at least you'll have to get big haircuts. But all that is good, I think, for China in the long run. It's going to make a more efficient, more transparent, less corrupt economy. Inevitably, that results in a better profitability and a higher valuation.
Finally, Mark, the big question mark on the big T, any taper talk that one can expect from the Fed?
Yeah. So we're looking for a $10 billion announcement tonight. In other words, they first announced in December that they would cut their monthly purchases from 85 down to 75 for this month in January. Now we think they'll announce tonight that they'll be cutting next month down to 65 and probably progressively cut by $10 billion increments unless, something really gets in the way economy-wise, but I don't think it will. I think the economy in the U.S. will grow somewhere between 3 to 4% this year. It will be very robust. And so when you add up the pros and cons of, tapering versus a stronger economy, I still feel that stronger economy is the better thing. Over the longer term, we don't want markets supported by waves of liquidity. We want markets driven by solid economics.